Hi everyone, welcome back to the channel. Hope you're all doing well and you've been finding trading a bit easier, being able to understand how the markets move a bit better, and being able to catch some nice trades. In today's video, I'm going to be talking a bit about news and how you can use this to your advantage to make some money from the markets using S&C. So if you've been following Forex for a while, I'm sure you know about NFP, which happens on the first Friday of every month, and it's the non-farm payrolls that basically talks about employment numbers in the US, the number of paid workers, and it has a big influence on the market, specifically any USD pair, so USD CAD or AUD USD, any pair that's got USD as one of the currencies, it has a big effect on that. There's also other major events such as FOMC, which happens at 7 o'clock on a Wednesday, when the Fed makes some statements which can drastically move the market either in the direction it was going or completely shift the market and change its direction. But also, if you've been following SMC, then you know that what we refer to as smart money is the big institutions. They're the ones that have a lot of money and they're the ones that are moving the markets. They're the ones that are going to be most interested in the outcome of the news, and they're going to have to try and profit from that by taking the market in the direction that they want. Because at the end of the day, while we're trading Forex to try and catch the movements, there's other people out there that are making big moves because they're trading different currencies internationally, doing trade, and they're not trying to make small profits off small price movements, but they're actually interested in changing currencies. And so they're going to be more interested in the outcome of these news events and understanding more of the economical side of trading, which is something you can follow. You can look at fundamental analysis as well. You don't need to, but it can be quite good to learn about that as well. So if you want me to make a video on that, then leave a comment down below. But for catching moves of the smart money with the news, you don't really need to understand fundamental side of things. You can just look at the chart, look at price action, see what the candles are showing you, and then make money that way. So something you might be noticed if you've been trading for a while is that sometimes you do get huge candles that kind of change the way the market moves. Something like this one here, down there, and more recently something like this big bearish candle just a few days ago. I'm not actually sure what news event this was. It was on Tuesday, probably about midday, probably some US news. But I did manage to catch a trade from it, even without knowing what the news was. But the main concepts we're going to be using in this kind of strategy, if that's what you want to call it, are going to be imbalance, liquidity, and order blocks. Mainly imbalance and order blocks. But liquidity is always a nice confirmation when looking at order blocks. So first, you're going to want to find a big candle that engulfs the previous one and leaves a lot of imbalance. Basically, just one of these huge candles that shows that at this price, when the news came out, people wanted to push down. Everyone was selling. There was a big sell-off, which normally shows that's the direction the market wants to move in. Sometimes you do get things where the price shoots up and then shoots down and carries on in its original direction, but you can't always know which way the market's going to go, and you have to just take trades that have a positive probability of making you money in the long term. So for this example, you see this huge bearish candle compared to all the candles that were happening before it. I mean, there's a few bullish candles here that are quite big, but this one took out all of them and just pushed price down in one candle with not many wicks on either side. And then you can look to the candle before it. If it's an order block, which it is here, so a trading range order block. There's a bit of indecision in this area. People knew the news was coming probably, and so they were hesitant to go long or go short. And then when the news came out, price shot down. So what you're going to want to do is mark up this block here. As I mentioned earlier, liquidity as well. Liquidity was taken out by that candle before it shot down. And also over here, you can see liquidity was taken out there, which is always a nice sign. Kind of merges a lot of different strategies into one. So obviously you can make your own rules for this concept, but liquidity being taken out is a good rule to have. It will mean you get less trades, but there will be high probability, which is always nice. But anyway, entry rules on this trade. I just went for a risk entry for 1 to 3 risk reward, and it played off nicely just before the end of the week. But obviously you can target. I mean, if you look at the trend, yes, we were going up there, but now we might have shifted to a downtrend here. So you can target these lows down here. Always just keep in mind higher risk reward, lower win probability, but higher reward. So the take profit is up to you. Entry is also up to you. This is just how I entered this one. Depending on how you like to trade, this is the 4-hour chart that I use this on, as much of my analysis is done on. But you can go down to lower time frames and catch a move on here. So for example, wait for price to come back in, create some liquidity here, which was taken out before into the zone, and then price shot down. This is a huge candle, so you might not be able to get a even lower time frame entry. I'll have a look in a minute, but you could have always entered on there with a stop loss there. So you have a different stop loss instead of having it all the way up here. You have it low down here. Also something to look at. Asian range was taken out. That's always nice. And then you can get in. See what down here. Target wherever you want. Maybe this would be a good place to target for a nice 2.88% reward. And confirmation entry. So If it had price had just shot up and continued through here, you wouldn't have lost out. Have a look down to the 1 minute as well. I don't like trading the 1 minute, but I don't really have enough time for it. But if it's something you like doing, then maybe a little bit of Wyckoff distribution here actually. That's quite nice. High here, weak high, gets taken out, and price shoots up, takes out this liquidity above here, and then pushes down. You could have got in any one of these candles. Obviously, these trades are going to be a lot less likely to play out, but maybe once these lows are broken here, or maybe this engulfing candle would be a nice entry point. And what would this given you? You could have just targeted the Asian lows as well. This is a 1 to 9 trade. Obviously, that's quite a long, quite high risk reward. They do play off sometimes, but they are quite hard to catch, and you will make mistakes. But if you have the time and commitment and discipline to learn this strategy on the 1 minute time frame, it's definitely going to pay off. Then you could just target the Asian lows, which is always a good thing to do for 4%. And as you can see, it did just take out the Asian lows before pushing back up again. So that's always a nice sign that your take profit was in a good place. But do backtest this and see how often it does occur, and make sure you do also look at the losing trades, just so you don't train your mind to think that every trade wins. I'll be looking at some more examples in a minute, but I'll just show you a couple of losing examples that I did take as well. On USD JPY, I took 2 in a row. I took a trade from this zone here, liquidity was created here, price took in, and then just unfortunately I was the liquidity in this case, which is a bit annoying, but that's the way it works. Price was taken out and then shot down again. Another kind of setup. Order block before a huge push down, broke structure, price returned, and then shot through it again. But that's the way it works. And I mean, possibly, I haven't actually entered this trade, but it's a possible entry. Somewhere in here you could look on the lower time frame next week. But just something to note, we are in December, and as you know, a lot of big institutions have gone home for Christmas. Christmas break. So there's a lot less volume in the markets, and moves are going to be a lot more trading ranges rather than big trends. Yeah, doesn't always work out. 2 losing trades in a row, not nice, but that's how it happens. CAD JPY, there must have been some JPY news because a lot of the trades I took were JPY. But here again, similar to GBP JPY, again liquidity was taken out a bit. Over here, price shot down, broke structure, big candle compared to all these ones before. Candles quite small, especially leading up to it. Price was slowing down the momentum, getting ready to change, and then big shoot down. Price comes back up, taps into it, pushes down, and then taps in, takes out liquidity again. That's a nice sign. When liquidity has been taken out into your zone, and then price has pushed down. Again, I just traded from the 4-hour zone, but possibly on the 15-minute there was some entry, and this looks like a bit of Wyckoff distribution. Again, maybe on the 1 minute you could have got an entry, but on the 15-minute, some you can wait to do if you don't like trading. Waiting for the high time frame supply zone and then the lower time frame supply zone, you can wait for structure to be broken with an engulfing candle like here. This is something I can make another video on. Stop loss above there, and then target wherever. Targeting a recent low is always good, and possible 3.3% trade there, or longer if you have the ability to hold. You could hold down to these Asian lows, you could hold down to these lows for 7%, but wherever you want. Just have a look at the 1 minute as well. Yeah, so nice liquidity created, highs taken out, liquidity created again, highs taken out. You can get in wherever, maybe on this candle here, it's engulfed, or maybe one of these ones, wherever stop loss above there. But then yours might have been taken out if you entered somewhere over here with your stop loss there. But that's just one of the downfalls of trading on the 1 minute. You might take a few losing trades before with the winning one, and that can really hurt you mentally. You might not have the commitment and the discipline to keep trying. You might lose a trade here, and then not take the winning trade. So you do need to be trade a lot smaller lot sizes, maybe risk 0.25%, 0.1%, however much you're comfortable with. But to make sure you manage your risk and your first psychology. So AUD USD is also something I took. I didn't take this trade, so I can delete that. But this is just something to note that they don't have to be immediate. So if you look back here, you can see that there was a big candle here, same setup. It's the same pattern on all the different not time frames. Yeah, it will be the same with different time frames, but sticking to the high time frames is normally better. All the different pairs, all the different news events is the same kind of setup. Price pushes up. There's a bit of a range here, and then price shoots down or shoots up. All these cases have been shorts, but you can go long from this strategy as well. But I can just take a look how long there was between that candle and where I got triggered. So 91 days, 3 months, that's a very long time, but that's not important, as you can see. Don't worry too much about how far in the past it was. Maybe it was, if you're trading on the really high time frames and it was ages ago, something to be careful of, but for this case, it worked out perfectly. Again, I just took a trade from there, stop loss about there, and at 1 to 3, pay out nicely. Again, target wherever you want. These lows, these lows, these lows. All depends on your risk appetite. But whatever the case, the entry is always nice. And again, maybe on 50-minute, there was a nice entry. Nothing really over there. Possibly something over here. This candle, liquidity was taken out and then pushed down. Not really anything I'd look to get on, but all depends on how you see the markets. And then lastly, we'll look at EURGPY, which is another one that I took a losing trade on. Something to note here that I've kind of learned, possibly why I lost, possibly it's just because that's the way Forex trading works. You don't win all your trades, even if they're good setups. But structure wasn't broken here, so maybe that's something you could look into as being your a rule. Price pushed down, didn't break this structure here, so we're still bullish market structure, and so you don't want to go short. But then it could have easily just played off as well because still took out liquidity and had a big bearish candle. This does work in the past. I've been trading for a while. I think on EURGPY, was it CAD JPY? There was a couple of trades in the past that I took. It's one over here. Similar setup. Liquidity wasn't taken out here, but this is what you're going to have to look into. Choose your own rules, back test them, see what you're comfortable with, depending on how many trades you want to take and how high probability you want them to be. But again, you can just trade from here. Nice small stop loss. Target wherever you want, these lows possibly, for a nice almost 7% trade. Played out very nicely, very easy to hold, no bullish candles. Once it's been triggered, all bearish on the 4-hour time frame. And another trade I took was over here. These are just the winning trades, but as always, there are a lot of losing trades. But because you've got a nice risk reward, you can afford to lose a few before, in between or before having your winning ones. This one, just this way, nice 1 to 3, played off perfectly before shooting up. So even if you're in like a bullish market, you can still catch some counter trend trades, which is nice. Obviously, if you're more experienced, then that's fine. If not, then you can always stick to just trading if the trend is bearish on the higher time frames. Even higher than this, you can go to the daily or the weekly to get your overall trend bias. These trades do lose, for example. I don't know if I'd call that big enough candle, but if you've got in there, obviously that would have lost, but I don't think that's, I'd class that as a big candle. So there's kind of some ambiguity between what different people would class as big candles, but I mean, this is kind of undeniably a big candle. You can always create a more mechanical, rule-based strategy around this. So you can say, for example, the big candle has to be 5 times the previous candle in size, but that's all up to you. This is just kind of the general textbook like overview of the strategy and concept. But I hope you see like how well this does work and how much influence it does have on the markets. Obviously, news is a big part that plays in the movement of the markets because they are currencies and it's everything that's going on in the world, the economics has an influence on the markets. And so it's something to look into. This is a trade I took that lost. Everything worked. Liquidity was taken out. Big candle. Lots of liquidity induced before tapping into the zone, but unfortunately the market just wanted to go downwards. But that's not something you can control. I hope this video has helped you. If it has, please do leave a like and subscribe to the channel and check out other videos. If you do need to learn a bit more about liquidity or imbalance or order blocks, I've got a nice video on the order blocks. But I'll be making a lot more videos now that I'm not trading because it's Christmas and best not to be in the markets during these times. So my advice to you as well, spend less time trading. There's no point wasting your money over these times. Save it for your family and spend time looking at the charts and come back in mid-January when you have a nice strategy that you've back tested and spent lots of time refining. But thanks for watching. I'll see you in the next video.